Hello, everyone, and welcome to episode 10 of Dissect the Trade. I'm Steve, and today I'm going to be going over the trade of the week, which was Netflix on 10/8, and then stocks to watch for next week ending October 16th, is Facebook, USO, Apple, and SPY. Alright, let's get going on the stock of the week, which was Netflix. Okay. So I have it set. It's on October 8th, around 9:52, pretty much. This is where it made a decent move down. Then, of course, around 1 o'clock, there was an announcement that Netflix was going to raise their streaming subscription to, I believe, $9.99 a month, and it took off. So let's start. Alright, so I'm looking for my entry to get in a put position. Should be any minute here. This is actually the signal, but you can see we got a little sideways action going on. So looking at the price, I am going to be looking at either the 108 or the 109, or no, the 110 or the 109 put. Alright, let's see. So we're picking up some selling pressure. Do the 110. 110, one contract of the weekly. Do a market order. Let's see how much of a difference is there. There's only 5 cents. So okay, the order was placed. Let's go ahead and speed this up a little bit. Finally pulling away from the 11 moving average. Got in the position a little too early. It was at 109.80, and then it ended up shooting a 110.07. So for a moment there, it was down about 35-40 bucks. And that's one of the issues about having the MACD as your entry, is that there is that possibility. I've said it before in a previous episode. So, like, even though here was a signal, if it's a tight range and it's going back and forth between the 11 moving average, that probably is going to be a false signal. So you want to wait for a breakaway. I mean, you may have gotten in a call right here, but it would have very quickly reversed on you. So it's kind of like it would be at your discretion, but here got on the position too soon. It ended up going up, and then it finally started coming back down. So now I'd be looking at my exit, which here's the first minute. There. Alright, manage to stay below it so I can stay in the trade. Alright, now if I wasn't at the computer screen or I was busy with doing something at work, at this point I would be setting up a trailing stop. Can't do that on Thinkorswim on demand, but how you would go about doing it is you'd go to, just like you were closing your order, instead of market, you'll see in here there'll be one that says trailing stop, and then you would, it can't really show it on here exactly. So then what you would do is you would give it an amount of how much further back from the current price that you would want it to stop out at. And as the stock kept going further and further down, that stop would adjust. So right now, I'd say maybe a $20 or a $30, that's the most that I would give up on on this position. So, or let's say 15 for example. Right now it was 315. So if it hit $3, it would automatically sell. Now that it's 320, it'd stop out at 305. And here's where I was looking at that. So, I mean, if you can't sit and watch it minute for minute, that would be something to do. Again, at the very beginning of the trade, you don't want to set it too tight, because if you do, you'll more than likely get stopped out, and you'll probably have gotten stopped out like within this little, this momentary bounce. You would have gotten stopped out here. So you want to give yourself a little range to accommodate for moments like that. But at the same time, you don't want to give yourself so much of a window that you'd end up losing money on the position. Alright. So, within this, pause it real quick. Okay. So within this move, I got in the position, there we go, at 9:53 and got out at 10:22. So half hour, and on that position it was an $85 gain. And granted, it's not much. Can go ahead and go a little further, and let me see what time that move started. Let's see. Alright, so I mean, I wouldn't have traded in this time because it's out of my window. But if you were watching Netflix throughout the day, C12 let's do 1257. Okay. Start it. So it's 103.20, so I'd be looking into the 103, 103 to 104 calls. Again, the ranges are tight enough, so go ahead with a market order. Now, I'm not going to go ahead and get in the position now because technically I wouldn't have. Said the MACD signal is showing to get into a position, but it's going back and forth between the 11 moving average. So it could go either way, and I don't want to be on the wrong side of it. So on this day, I wouldn't have known that this was going to happen, so I'm not going to trade it like I do know what's going to happen. Alright. So the 103, one contract, market. I'm going to go ahead and get this ready to sell. Okay. Now, the spread is now quite nasty on this. Because it was such a huge move in such a quick amount of time. Depending on how it looks when it comes time to get out of this trade, it would be better to probably do a limit order on this one, unless the spread gets tighter. I'm going to go ahead and set a limit order. Let's see. So there's about $1.05 spread. Oh, now it's like 70 or 60. Oh. So what I'm going to do is I'm going to go for the mid. Up. There. A little bit more than mid. It sold at 860. So this one got in the position at 1 o'clock. Got out of the position at 129. And that one was a $621 gain. So, I mean, if you would have traded that, that was a huge move. But even in the morning, $85. With the dough commission rate, that's only $3 taken out of commission, so technically $82, which isn't bad. Alright, go ahead and close this out. And now, the stocks to watch for this week. Alright, first up, we have Facebook. Our earnings season is coming up. The markets could react based on earnings. Although the nice little crash that we had back here, I don't know how that's really going to have an effect on individual companies. We've been grinding up last week. If we continue the grind up, see Facebook has resistance at 95.55, support 92.75. I'd be looking for those two levels. I mean, the downside, there's quite a bit of resistance, or quite a bit of support at the 92.75 level. Not so much on the 95.55. So, if it does manage to break on the downside, it could head down to 90.84, 89.26. But based on sentiment, people believe it's going to go up. So, looking at 97.18, 98.95. Next, we have US oil. Again, oil has been taking off. People believe that we've hit the low. Major support at the 15.11 level, and we've tested it. I don't know. Let's see, 1, 2, 3, 4, 5, 6, 7 times in the past. Since the beginning of September. So, if you're looking for oil, possibly make some more up move. Next level resistance is 19.23. Don't believe it's gonna hit that in a week, but you slow grind up. Apple. Apple's got a heavy resistance at the 112.24 level. I don't know, I think Apple will have a little more sideways action. If it breaks 102.24, can easily maybe see 116.51. That'd be the top of the range that it's been in for a while. It breaks, heads down towards 108.01. The next level of support is 94.87. So I don't see it going down that low. Probably staying within this range of 116.51 and 108.01. And finally, we have SPY, which overall the markets have been going up all last week. Whether we see some downside overall in the markets, we may. Looking at this, it's been in a range of, let's see, 187.27 for the low, and a high of 203.25. That's quite a big range. Get a little relief this week. It's gonna use the 200 as support. It's a nice round psychological number. If it breaks that, 198.97. On the upside, yeah, the 203.25. If it can break that, then overall more market upside, 204.53, 205.42. If we do continue this grind up, it's the next major area of resistance here would be, what is that? 210.64. We have all these resistance levels here, but that would be a fill. That'd be the cup fill. And if that happens, then probably going to be bullish, and we're going to see all-time highs again. So those are my views on this. I don't know, hopefully they come true. I mean, who knows? It's unpredictable, but it's nice to be able to kind of gauge the markets again, see where they're at, now that volatility has kind of started to come down. So that's it for today's episode of Dissect the Trade. Good luck next week, and until next time.